Hello, Slopers. It's Brian Johnson with thestockmatter.com, helping Tim out here. He's on vacation. It's unusual to not see a post every 2 hours or so from Tim. I think it's great, actually. He needs to take a vacation, let his brain slow down. So, step up, try to do a few extra videos for him this week, help him fill the content up. Maybe you can put these on and help kind of take the slack off of him. All right, so what have we been watching? We have been watching this little channel. That was from my last video. You'll notice that it was a bear flag. Yes, but I said there was both a bearish and a bullish case to this market. I could have made either one of those cases over the weekend. As it turns out, it was bullish today. So we broke up and above this area. This bear flag is now a broken formation to me. I will still keep these lines in here because a lot of times when it comes back to retest, it will use these lines as support after that. But for all practical purposes, I'm really watching these overhead levels to see if the bull march can stay on. So here we have a break of 10,200. That was our 10,250 was really my first level. 10,200 first, then 10,250, now 10,300, and ultimately this 200 period moving average. Getting up and above there, and more importantly, a close above there would be a very good start for the bulls into this little march that we're having upwards here. Now, I'm sure what we've seen today is going to have maybe some Elliott Wave people running for the chalkboard trying to redo what they do. So always keep this in mind. I'm very adamant about this. Keep your bias out of the market. Why? Because the market does not care what you think. You can yell and scream at the monitor all you want. It doesn't matter. The markets don't care. So just use your support and resistance areas to find very defensible places to get long or short. In this case, we are starting to get a little overextended here. I would be watching very carefully this area right up here if and when we get to this area on the Dow. That is about the 10,300 to 10,325. And I'm going to be showing you nothing but 60-minute charts. On the daily, you can see there's a little bit more overhead resistance as well. But I am intraday trading as of right now because I do not honestly trust this rally to the upside quite yet. So I will wait and let it prove to me that it is for real. Really, over this 10,325, and more importantly, once again, a close above 10,325 on the Dow if you're looking to get a little bit more bullish on this market. The NDX, you can see the very sharp angle we've had lately. Love this little channel line that we are in. It is on just above this particular, I still call this a bear flag, so we still have some work to get done, but I do not see why we can't make this 1820 mark up here. 1818, I think, is a very strong resistance level on the daily. 1814, as you can see, and 1820 are both in this area. They both provide some very strong overhead resistance to the NASDAQ with a gap fill and the 200 period moving average. These are very good areas if you happen to be long and held overnight. I was not brave enough to do that, but if we make these levels, I would start to move up my stops and be very careful going forward. A push above this area, especially a push above 1830 on the NDX, I like to follow the NASDAQ 100, on the NDX would certainly mean more bullish behavior ahead. On the S&P, once again, bear flag broke out and over it. We are now leaving gaps behind us that we will eventually have to come back and fill, but that does not have to happen tomorrow. That can happen anytime. Here is our overhead area. Now that we have broken 1085, my next level was about 1090-ish or so. You can see we stalled there. That was the 20 MA on the daily. Now that we have broken up over that, I really don't see any reason why we cannot reach this 1100-ish area. My level up here is 1103 to 1108. It's 1103 to 1105 on the 60-minute chart, and 1108 is the 20-day moving average on the SPX. So I will be looking to watch for some trades up in this area. My strategy up here is just to look for defensible places to get short and or long. Once again, strong overhead resistance between 1103 and 1108. Those would be the levels to not be playing in. I will wait. I will either wait for it to break 1110 before I look to go long, or I will see if it can come back down here and retest some of these lower levels to take a short position on. Here's a few other things we looked at. ABX was on my video as well. You can see how it gapped up today, only to come into this overhead resistance, also coinciding with the 200 period moving average and holding very nicely up there. This behavior is actually bullish. Bearish behavior would have pulled this right back down. Yes, we do have a gap to fill, so we want to be careful of that if and when we get back to this area. But for the time being, we're holding up very nicely. If we look at this on a daily, you can see we broke out over this falling wedge. I love my wedgies. This falling wedge is bullish. It is very common to see, once we see a break of this area, it's very common to see it come back and retest this upper trend line before then moving again to the upside. That may also happen on a move back down. I do not like the fact that it gapped down here. Would have loved to have seen this run up and through this area. That would have given me a beautiful entry, but you may have to wait. So keep this on your charts. Might be something you guys want to keep watching. ABX is a gold or it's a Barrick gold, so depending on how you feel about gold, you may or may not want to play that one. APEI is one you should also keep your eye on. I love this little rising channel that we have here. It's a beautiful uptrend in APEI. However, I am still neutral to bearish on the market in the longer term outlook. I'm really waiting for a break of this lower trend line. I will then start to look for a short entry into APEI, and that one could pay off very well. There's a lot of lower support areas down here I think we could get back to. BTU is another one I'm going to throw on the chart for today. And you can see we have been following this big trend line since March. We now have a break of it. And in true fashion, appears we may come back to retest that. If, in fact, we do get back to this lower trend line, that will also coincide very nearly with this $48 mark. That could be the kiss of death and would make for a very, very tasty short entry. Tim would be very proud of this trade. This is exactly the type of stuff he loves to find. So, Tim, this one's for you, man. Hope you enjoy it. Something for all of you to be watching. And that, I think, does it. That's all I had. I want to make this short and sweet. Hope you guys have something you can watch, or at least something you can take with you from this video. I will be back possibly even tomorrow. Might do these for the rest of the week for Tim, just to help him out. So, hope you guys enjoyed it. Be talking with you again soon. Bye.